And one of our major banks is now offering a lower rate for a 5-year mortgage than a 1-year rate. The move by ASB has seen its 5-year rate shunted down by 50 basis points to 6.49%. Its 3- and 4-year rates were also lowered, but the bank's short-term rates were increased. Well, let's discuss this further with independent economist Tony Alexander. Hi there, Tony. Thanks, as always, for joining us. What should we be reading into this?
Well, basically, it's a reflection of the expectation building that the economy is going to weaken, inflationary pressures will fall off, and so the medium to long-term interest rates are already coming down to reflect that in the wholesale markets, and now we're starting to see some feed through, of course, into the mortgage market as well.
So is this unusual that the ASB Bank has made this move now, considering we're not due to actually hear from the Reserve Bank about the official OCR for another month?
Well, not so much unusual in that the cost to banks of borrowing money has actually fallen quite a way over the past 3 to 4 weeks, with the interest rates in the United States falling, with low inflation numbers, etc. across there. We've also got the margins for bank fixed rate lending for periods of 3 years and beyond rising to above average levels. And of course, banks, even if they may not say it, they do have sales targets, and they're not meeting them now with the housing market weakening away.
OK, with that in mind, will other banks follow suit, do you think?
I think they will follow suit, but maybe they'll just wait until after the inflation number coming out in a couple of days' time, because as we've seen recently, you can easily get a surprise which could change interest rate movements.
For quite some time, we've been seeing interest rates just going up and up. Do you think many people will be jumping on these reduced long-term rates?
That's the danger, you see. People will look at the long-term rates being lower than the short-term rates and thinks, oh, maybe this is a good level to fix at. Well, if you're looking at the 5-year rate, over the past 8 years, it's moved from broadly 3% to 7%, sitting at 6.49%. You'll be locking in near the top of the cycle. Personally, it's not something that I would feel inclined to do.
OK, in a couple of days' times, we've got those new inflation numbers coming out. What are you picking at this stage?
Something close to the 7.2% expectation in the markets there. But as we saw last time, the outcome was about 0.6% different from expectations. So like everyone else, I'm just going to interpret it on the day, and it will have some interest rate implications. Interesting to see.
OK, Tony, thanks very much for your analysis tonight.
Cheers.